Good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for Friday night, April 8th, 2022. Microphone check, please. And screen share check. Well, I had another interesting session with in a business accelerator workshop today with some guys that want me to spend 25 grand to accelerate the business again. At some point, I may start paying attention. They know something that I don't know. All right, so today we had a micro gap, if anything, and ended up with a small range doji on an inside day, meaning that it did not break out higher than the previous day's high or low. So that acts as like a range compression in a manner of speaking. And it finished right in the middle of its range, right at 447.59. It's almost like the pause that refreshes, which makes me think that this is really the correct price after all, where it really should be. And it's digesting this upward move. It has pulled back a measured different distance. And now we're in a critical state, ready to break up or break down after a weekend where we can just relax today for a moment. That's kind of what it felt like. The 3-period haul is up. The 10-period regression line has flipped yesterday into the fall and is pointing downward. The PSAR, this long PSAR trail, flipped here. Now we're in the second day of the PSAR. It just began its acceleration. There was not much at all. So that's basically remaining flat at about 460. The dragon has rolled over. We can see that. But the RL30 is up. So we do not have an owl entry as long as this is up. It would take a couple days of selling pressure to make this RL30 roll over. So we're at least 3 days away from an owl entry to the downside. That's not to say that we can't get an entry on a signal. Like I would play a tactical move short from here to here. And then if the 10-day low broke, a tactical trade to the Bollinger Band mean. And then if that broke, I would adopt a swing side, a swing position on the short side on the break of the Bollinger Band mean. And then I'd be aiming for Z1 and then Z2. And this is where I'd put my second position on if it broke through Z1. Then this acts as a belly of the dragon twice. And that's where I would have my third position short on that breakdown below 418. To the upside, I'm automatically long from here. If it breaks above the peak of the dragon, I would add a second position. And then I think if it breaks above the third 30-day high, I should say, is where I'd add that third position long. Yeah, I mean, we got to get through this dragon resistance, and that's why it'd be a single position till we clear the dragon for me. So the lack of volatility is about the only second order information on that. And the fact that we have like a 1, a 2. So now if it can break out of this, like it opens here and then breaks out, that would be a 1, 2, 3 entry right there. So I'm ready to play that one at 451. All right, next up is the sectors. So we're looking at the S&P here, down a quarter. We had emerging markets up a fraction. The best performers again was the Dow, DIA, slightly underperforming the Russell at minus 0.8. Treasuries -1 down to the key price around 125. And then the Qs at minus 1.4. Let's take a look at the downsides first. Mexico minus 0.5. Lithium, consumer discretionary, and marijuana 0.95. S&P Tech 1.4. Bitcoin 1.4. Ethereum 1.6. The FANGs and blockchain 1.8. Biotech 2.25. Arc Genomics, Global Future of Finance 2.7, 2.9. Arc Innovation 3.2. Moonshots, Clean Energy, Large Cap Crypto 4.36. The biggest underperformers in the stocks, Robinhood minus 6.8. Coinbase, Tesla, and Rivian all off about 3%. Bakkt and Alcoa 2.3. Squarespace 2.1. Cliff 2%. PayPal 1.6. Apple 1.2. So quite a wide range of weakness across the board. Should also add U.S. Steel in there at minus 0.6. So the steels got hit hard. Upside, Brazil 0.24. Consumer staples 0.4. Materials, wood, finance, the other lumber, blended commodities, oil, agriculture, wheat and precious, commercial real estate, oil exploration up to 2.25. So that's a pretty wide range of inflation sensitive instruments. The VIX 2.5, energy 2.75. So this was all about the sectors today. Devon Energy 3.5, and no other individual stock up there. All the individual stocks are down below. So this was all inflation plays in here, and defense with staples and materials. All right, let's go to the reports. So we remain in market sideways normal, basically slightly above average across the board with the exception of the 10-day, which is still weak. The risk C is giving us a cautionary risk on, as it is now back, it has come back to about 2.25 in the Z score. The ETF2, the ETF2 theoretical exposure just got weaker. So now we only have 2 indexes that are better than their 4-month moving average. Last week it was 4. So that's, that's a cautionary tale. Even last week, which was relatively healthy compared to the last couple of months, even that was only 40% exposure. So this is still a fragile market. On the monthly, you can see there's the COVID, the little recent weakness. And this was actually kind of helpful right there. It's a caution. It didn't fail further, but I would still have a strict stop right there at about 440. If I was trading that longer term, I would not let it go below 440. I don't see any reason to even let it like get to 330. Why would you? It's another 2.5% I want to protect. The 9-day, you can see that little 1, 2, 3 rebound that came, entry would have been here off a 1, 2, and then a 1, 2, 3 entry is here. That yielded weakness here these last 9 days has not been good. And again, 440 looks like the solid support. This little test of the Z1, we haven't even seen for a long time, for almost 2 full years, all the way back to COVID. That's how weak that move was on a relative basis. Weekly, the peak ended in a doji and is resolving to the downside. That's not a healthy sign. It's got a hold of, here's 440, that key price level. On the weekly, I could be tempted at 448 to just hold right there and try to lock in any gains that you had made in this period. A stop at 446 locks that in. 440, in my view, on this time frame, is given back too much. The 3-day, this was a bit of stability here in us. So you got the sell-off, which we saw, but then it failed to fail further these last 3 days. So that is telling you like maybe 446 is the reasonable support, and 440 is kind of the no kidding, do not let it get past that at all. But to me, 446, or even if you went the 2-bar low at 444, either one of those would be preferable in order to preserve more of this upside move, which is already given back $20, which is 5%. I think, yeah, we already covered the daily. That's right. Okay, so the ETF 2 portfolios, the Bmr portfolios, I should say. This was the week that Latin America cracked, but not as bad as the Qs and MDY, or Japan for that matter. Oh, just misery. Treasuries is the odd one there. No flight to quality there. That's showing weakness of the dollar, I think. The Russell very weak in that stack, really lagging the large caps. So there was really no safe haven this week. It was just a question of how much you were going to lose. The commodity-based economy of Australia is looking reasonable, as is Asia less Japan, and U.S. real estate feels good. You could live with that. And the resilience of the S&P 500, sort of all eyes are on that inside the U.S., not even trying to differentiate with the mid caps and small caps or tech. This is really just the S&P 500 and hoping that it can hold is how I'm reading that. Energy is on the mend. Utilities and healthcare in the defensive plays, and staples leading the way. So you can see the difference now between the ETF 13 portfolio and the 22 portfolio. You can actually get some differentiation here in the U.S. sector spiders, instead of just playing it as flat, as you see up in here. You can actually see where the strength opportunities are, and try to get some of that, right? So ETF 32, adds the blended commodities. That's pretty nice. I think that's a reasonable anti-inflation play. My daughter thinks so too. Rachel's in that one. Yeah, Bill, you'll be proud of your niece that she picked that one out of a hat. Healthcare making a little recovery here. And the staples, just again, nice defensive play. That's the other one she picked. She had accumulated enough money for her Roth IRA that she was, and 401ks that she was trying to figure that out. It's pretty good at age 23 picking blended commodities, staples, and U.S. real estate. Yep, she's a boss. In the Dow 30, you can see the healthcare symbols, and Walmart in this sense is both a staple and a farm. And there's Merck, so there's something in there. Coca-Cola has made a nice little bounce. Procter and Gamble in that space. McDonald's recovering nicely. Just the two sectors on a buy signal here, Asia less Japan and Latin America. That's how you get to 20-80 split. Last week that was 40-60, so it got a little bit weaker this week. Energy still the lone survivor here. Materials running a nice second. Staples and utilities also looking fairly good. Actually better than materials, to be honest. Utilities making their little comeback. Green and white. We look for the ATR percentage column to find the best short-term traders that combine volatility and liquidity based on daily dollar volume, right? It's sorted by daily dollar volume. So you get the energy sector, semis, China and oil exploration, biotech and gold miners, regional banks. Brazil is in a pretty nice honorable mention there, as is consumer discretionary. Latin America flashing the warning sign for potential channeling. That little pullback of 3%, and it had been outperforming so much that that's worth stalking. Let's get one of the boys in the sound of my voice there to frame that trade for us for tomorrow night. Lots of auto framers to choose from. There's a interesting one in Boeing, which has just been getting slaughtered in a time of war. What? It's got a 1 on the RSI 2, so there's 4 of them in that condition, but this is by far the most interesting one. It's a doji, a 5-day down, 4.9 to 1. Let's make sure that we get Boeing framed up this weekend, fellas. That's a screaming frame. Ready to go in either direction, obviously. Disney at 4.4 to 1. and a 7 on the RSI 2. Remember, in RSI 2, we're looking for short-term extremes under 10. And then IBM and Intel. Boy, I think Intel's the interesting play there. 5.8 to 1. Let's make sure we get Intel framed this weekend. So must see Intel, Boeing. What else? I'm going to like JP Morgan because it's still 3.8 to 1, but it was a % winner today. And it has been really horrible over most of the time frames, except for the one day. And maybe ExxonMobil is back. Continuation of strength play. In the ETFs, target rich environment here. No 5DDs. A number of 551Ws. Europe has the 2 to 1. AFA index 2.7 to 1. Tech, you have to look at that when it's 4 to 1, and it's an 8 on the RSI 2. Treasuries just getting slaughtered. Makes it a nice intraday trade. We saw Glenn's wonderful trade on that earlier this week. Framers market here in the auto framer, lots to choose from. There's our Intel, Boeing, and Disney right off the bat. Looking at their chosen risk in here too. Oops, sorry. Didn't mean to hit that. Tesla on the squeeze in the yellow zone trading. S&P's not bad either, near the top of the stack. And there's Boeing. Boy, that's the one to get, boy. My brother, you better be on Boeing on Monday. And frame up Intel. Lots of symbols in the fall. They're trying to hold on, hoping that this is the turnaround point, as we showed on the chart. But I'm liking real estate and consumer staples right there. And then this little cluster of 5. Go ahead and call it 6. United Health, Walmart, Coke, Merck, McDonald's, Procter. That's as staples as you want to get. This is a tale of the haves and the have-nots. So all these defensive plays here. And all of these have-nots up in here. Being dominated by the defensive plays there. That's a doji waiting to happen. Break up or breakdown. What's it going to be? Critical state. Decision point. As it comes into the station, is it the next leg up and that's a kata 2? Or is this all that it is? And then it rolls over and comes back to the Bollinger Band mean, to the mean, I should say. Making the turnover at the usual place. This led to a 2-leg down. That was a considerable move from here all the way down into here. That was a 13% sell. The 30 getting weak. The 10 is already weak, and the 90 is peaking. Boy, if that breaks down below, then this is like a kata 2 on the slope stat, and that's what could bring it all the way back to about 420. That's why I would not let it get below 440, which is right about there. All right, that's everything we'll look at. Let's see. Yeah, smart. Let's look at the markups here. Glenn with a series. This is in electronic arts that he marked up yesterday. And here's 2/3 of an R with standard markups. Good exit. Good re-entry on the PSAR drop. I think we might have done a little better, but at least it negated the stop and reverse at the PSAR flip. This is where if you were playing the standard box at the RL10, but he's using a standard risk, which makes this a little easier to trade. It's calmer because you're trading in smaller fractions of R. It waits for the full pattern. I'm not offended. And got paid 0.65 in a very meticulous, workmanlike way. Collapsing Dragon study by Griff. He's working hard on the other project already. We're getting some validation on that CD pattern, if I'm being honest. And man, boy, do you love that one. Holy smokes. And here's your SSC, and there's your Kata 2. Whew. So 2.5 R. This all scratches out. So you got the moves that were there to be gotten. When you add all the patterns, you now get this one and this one, and you bring home 8.7 today on the integrated patterns. Ladies and gentlemen, know those three patterns: SSC, Kata 2s, CDs. That's how you do it. That little trio is all you need. Yeah, Ken, what about the Z3P and the super pinch? Yeah, you don't need them. You want them, but you don't need them. You need them. You want them. All right, let's see here. Let's zoom in for Tim. You know, I look at his charts. He just makes me want to do better work. That's how good his work is. I'm noticing what he's noticing. This holds support. When this thing comes down and tests and holds support, I would, instead of saying rejected, I would say held support. And then that gives you this Kata 2, this leg and that leg. Now when the zero line is crossed here, pow, that's the importance of the zero line. This zero line was tested and rejected, and that leads you to we should be short here, but still we got a good move. Got this move down here. I don't know that I'd be trying that, but if you do, and you get this far all the way up to the VWAP and it starts to roll over, take half the bar. You should be executing on half the bar. Keep half, especially when you're in the wrong. When we're in the winter and we're long, and it hits the VWAP and starts to reverse, take it or take half the bar. Don't come down and get that one. And then you could be short that thing right here instead of here. And then this one, you might have held that one longer, but even if you didn't, you got to get back on that one right there. Holy smokes. That's below the zero line and failing as part of this whole fail. Oh, that's the one you want. The downside moves are the ones that break the biggest. And now look at this little relief rally here. Zero line is crossed here. That makes this one all good, all good. 1.5R today. On a day the market lost, he's up 1.5. Nice work, Tim. Now, let's see if you can figure out what I'm going to say to Wojcik here. I'm going to look at this massively collapsing symbol and say, when it rejects, when it's rejecting the VWAP here with a lower high, maybe we don't need to go long 4 times. Maybe the WMB3 failure, like this thing failed instantly. So stop it here and go short. This one failed instantly. Stop it here, go short. This one failed instantly. Stop there, go short. This one was a lower high, failed here, go short. In conclusion, go short. This was a nice one, good payoff. Here's the COTA 2. Here's a COTA 2. There's my reentry. There's my reentry, for crying out loud. Let's start picking these patterns up and make a reasoned judgment about what to do with the information that you're seeing. Now that you can see the basic framework that allows you to catch the turning points, and you're doing a better job of minimizing the sell-off, the retracements, that's good. Now get into the business of exploiting the opportunities that's there. Look at this massive RLFF style. Look how far that went, and it gets right back. The size of the sell-off is the size of the recovery. And then look that it lost all this twice as fast as it could regain it. That's why you love the short side, because it happens quick, fast, and in a hurry. So down 0.6 today. We should have been up 5, and we're at 5.7 for the week, even with this badness. So that means in the first 4 days, you were 6.3 on an emerging rule set. I think we can work with that. Just saying. Here's Visa. That was the first one we looked at yesterday from Glenn's work. Got paid. Good effort to the downside. Quick stop and reverse. Got paid. COTA 2. Got paid. Good scratch. Stop and reverse. Got paid. 2.65. Ladies and gentlemen of the jury, I rest my case. You should be paying attention. You should be paying attention to what Luke and Les and Tim and Glenn and my brother are doing in their niches. And Ken Hum, of course. Here's another 1R. This is in Dow Chemical. also framed yesterday to give you this potential mover. The rollover, oh, this is sweet. So the gap up and rollover breaks through the dragon, short, cash, stop and reverse, cash, stop and reverse, cash, stop and reverse. I'd have been so tempted here on a breakout above this. Oh, are you kidding me? And here's the Z3 pinch, and it broke above that. And now, to be fair, with the standard risk, you're only 0.3 in hand. But boy, just based on a trade location, yikes. Great exit for another one. So that was 2.6, 3.6, almost 5R for the day in a very relaxed manner. All right, that's everything we got, fellas. Oh, no, it's not. We got one more. I have the trading example. Just remembered. Yeah. Well, so here's a symbol. It's about an hour into the day. This was yesterday's close. Here was today's open. So this is the size of the gap right there. That's the gap. Sells off harshly. Monkeys around, fake one, go to, slight recover. And now it's right at the Bollinger Band mean. This would be I would call that a Kata 2, a low, a higher low. So I would call that a Kata 2 breakout. I would call this a collapsing dragon. I would add my second position here. I would think hard about a second position right there because of the break above the Z3 line and above the peak, and that this was such a fast sell-off that it has a good chance of getting to here on a gap recovery. So this is sort of an example of a perfect critical state intraday. If these were daily bars, you would also treat this as a standard critical state too. So we might just, that's the zone of indecision. As I'm drawing my standard frame, I'm looking at, there's your Z1, Z2, Z3. Here's the PSAR flip and the RL10 peak right there. This is the like high of the day. Here's the fair market value, the RL270, and yesterday's close. So really anything north of that would be automatic third entry to me. So just do a quick inventory of your feelings. Where do you feel like this thing's going? You can see there was a sell-off because of this. Could you live with that breakout from that box? I mean, getting the trade frame here short and here long. So your indecision zone is inside that space, and then this would be your first short. To me, your second short has to be here, right? because you've already had the big sell off to begin with, and now it's violating below the RL10. That's such an automatic second position short. I don't care that you only got, 2/3 of an R in hand. So we're long. What's our next job? Somewhere up in here, I got to get to no lose plus dinner for two. Somewhere in here when we make that move. Probably not later than price breaking above that. Screw it. Do it. I'll put that sucker right there in a heartbeat. And quickly get stopped out. I mean, it's either going to work right away or it doesn't. I'm not sticking around. So now I might take this and say, the thing is forming. So I'll play that frame. Let's try to clean up the battlefield a little bit. Probably would have helped earlier. Sorry about that. Is that trade frame making sense to you? Because we're already on the south side of the dragon and breaking the PSAR. And then if that one fails, I want a second position there. And I would take a third position there. Screw it. I'm not afraid. Your mileage may vary. So there's our stop. Probably be like this already. Ready to just drag that north. Sorry, this should be here. Bingo. Yes. Keep half. Exit. How often do you want those trades? Every day? I do. I'll take a million of those. Not much else to see there. This one probably on a better day. What you end up getting used to seeing is that little opportunity box between the PSARs, right? PSAR Valley. All right, so that's everything we got for today. That one was probably, let's see, that's about one. This one was probably 1.5, 2. So that's probably a total. This whole series is probably 3. That was on, I think it was on Win. Yeah, it was on Win. The casinos that Glenn Osborne framed for us yesterday. So nice work, Glenn, and thanks much. All right, fellas, that's all we got. We'll see you tomorrow. So tomorrow night, we have the girls are coming home. We got a soccer match to go to. So I'm going to record at, let's see, at 6. We're probably 5. I'm going to try and record tomorrow at 5. So that I'll be back from soccer practice by then and try to get that done. If I'm not going to make it at 5, I'll put a note there and then I'll record it after the game. So it'll be a late one tomorrow night. Okay. So get your charts posted. I will get it recorded sometime tomorrow, either 5 or at 11 p.m. Okay. So we'll see you tomorrow.